Thanks, Luan, and really appreciate you spending a couple minutes with me here this afternoon. Luan had forewarned me that I would be the after lunch or immediate after lunch speaker, so I figured I'd try to actually do something other than kind of a typical funding circle advertisement, although I've got a bit of that toward the end, and try to actually situate what we're doing and what many of the other platforms here are doing in kind of a broader view of what's going on macroeconomically in the world right now, and particularly how the trend of marketplace or peer-to-peer lending is shaping up in the United States. So as Luan said, I'm a co-founder and I run the US business for Funding Circle. Funding Circle is a marketplace lender that is exclusively focused on small business loans. Inception to date, we've lent out about $1.5 billion to great small businesses across the US and the UK. And we're actually on the cusp of thinking about, from a product extension perspective and also a geographic perspective, how do we even expand beyond this? So, as I said, I want to talk a little bit about where we are today and what that means for the sector. And I'm no macroeconomist, but I do have the privilege of talking to many, quite frequently, just as we think about the business. And if you talk to them, if you read what's going on in the newspaper, there are obviously some jitters afoot. What's going on in China, it's a structural shift. Manufacturing sector seems to be, basically kind of over-allocated. There's a demographic shift going on, so the labor supply, is basically tapping out for, not for white-collar jobs, but many other manufacturing, kind of middle economy jobs. And as a result of that, they're shifting from an 8 or 9% growth rate to more like a 4% growth rate. And that, from everything I've seen, that's a long-term shift. Now, in the U.S., on the other hand, you have a gradual, recovering economy. If you actually look at this from a GDP perspective, obviously GDP is up and to the right ever since the financial crisis. The unemployment rate is dropping. If you looked at the Fed's announcement a week and a half ago to not raise rates, part of the rationale for that is just around the fact that there's no inflation. But if you look at it from a jobs perspective also, the unemployment rate is projected to be at 5% by the end of the year. So what does that entail for investors and kind of for the economy more generally? Well, probably what it means is we're going to be in a period of kind of slow, stable growth in the US for some time to come. And as a result of that, traditional asset classes are probably pretty likely to disappoint. There may be pockets of opportunity, if you're a good stock picker, which I certainly am not. I always underperform the market when I try to pick stocks. But if you're a good stock picker, maybe you can find a sector or a company that's going to grow faster than is expected, or maybe you can short a stock that is worse than people think. From a fixed income perspective, despite the fact that spreads are blowing out a little bit in corporate and also on high yield, just given where rates are, the actual annualized return on all of these products is actually pretty low. And so for many investors, it's really a challenge to figure out where do they put money. Now, one of the things that I think marketplace lending is somewhat unfairly critiqued for is, well, this is just the same thing as subprime. And the reality is there are certain aspects of what we're doing that are somewhat analogous in terms of how the market structure is working. Obviously, the ABS market is starting to come back. But if you actually look at the core product and the core borrower, I would actually assert that for the most part, it's quite different. This is not deep subprime. In fact, most of the borrowers that are being served through Funding Circle or the other large platforms actually are very much prime borrowers. In our case, the average business owner behind one of our loans has a north of 700 FICO. These are businesses on average that have between $1 and $3 million in revenue. On average, they've been around for 7 to 10 years, 15 employees. They're growing and they're looking for expansion capital. And what we at Funding Circle are doing, what other folks are doing in the SME space, other folks are doing in real estate and in consumer, is fundamentally delivering a better approach, lower cost, better experience to allow these businesses and also these consumers to get access to credit. We're using technology to do it. We're using cutting-edge risk analytics to do it. But ultimately, it's really around the experience more than anything else. And so that's why I think this time is actually, in some important ways, very, very different. The other big piece of it is because it's a marketplace-driven approach, it's actually fundamentally lower leverage than the capital formation approach that kind of we experienced in the run-up to the financial crisis. For the most part, in our lenders who are buying loans through us, even on the institutional side, if they're putting leverage at all, they're only putting, say, 60 to 75% LTV. as opposed to kind of the capital markets, manufacturing process that went into a lot of the credit formation the last cycle, where you actually would see, upwards of 20 to 30 times leverage, not as a percent of LTV, but 20 to 30 times leverage in terms of the underlying equity. So where does that leave us? So I would assert that it's actually a good thing. What it means is that even as we go through kind of a gradual, recovery in the U.S. and in other parts of the world, marketplace lenders like Funding Circle are offering a really novel way of delivering credit. In some cases, actually offering credit expansion to businesses. This is being abetted by serious institutional capital that's coming to bear here. I'm sure some of that has already been talked about today, and I'm sure it'll come up more in the panels this afternoon. But you're not only seeing kind of the early adopters, the dedicated marketplace hedge funds do this, but you're actually seeing multi-strategy asset managers and now actually real money pools, including banks, coming and participating in this market as well. This, we think, leads to a virtuous cycle where, as you bring in more capital and the capital is more differentiated, you're actually increasing the credit access. This is something that's going on globally. If anything, there's kind of a complementary goods effect where by having one part of this general space succeed, investors are having appetite for other segments. Many investors are actually investing across segments, and that proceeds in I think, a very, very positive way. At the end of the day, marketplace lending, I think, for investors is about accessing, or basically giving the ability to directly access the household sector, which is something a lot of investors, particularly ones in parts of the world that are growing less quickly, are really excited about. And so we think, particularly on the capital formation side, this trend is going to continue for some time to come. So with that, now on to the Funding Circle advertisement. Where does Funding Circle fit in? We're an online marketplace for small business loans. Some of us, you may be familiar with us, but for those who aren't, we've, as I said, done about $1.5 billion in origination. 100% of our focus is on small business. We think it's an asset class and also a type of borrower that's very poorly underserved, not only in the US and the UK, but actually all over the world. And our business model is as a pure marketplace. So we're not taking a spread, we're not using our balance sheet, rather we're providing a technology-driven experience on both sides where supply and demand for capital is matched up. We make money on an origination fee that's borne by the borrower, as well as a servicing fee that is paid by the lender. To date, we've raised about $273 million in equity and have about 350 employees. As I said, US, UK, there's a lot of opportunity. I won't go into the details of this slide, but the core of it is, if you look back 20 years, you could go into a community bank, and you probably knew the bank for 15 years, and as a small business owner, you could get $100,000 to expand your storefront, broaden your product line, or otherwise kind of invest in your business. For lots of reasons, that opportunity or that option really is kind of getting pulled back. If you go back 20, 25 years, there were 18,000 banks in the US. Today, there are 6,500. Some people forecast that by the end of the decade, the number will be down to 4,500. And what that's meant is just a big structural gap where businesses that are looking for term credit and working capital in increments under $1 million are very, very poorly served. Filling this gap, we've been able to grow the business quite quickly. We're currently originating over $100 million per month and growing at over 100% year over year. And this is a big market. Small business lending, depending on how you count it up, is at least a $250 billion annual opportunity across term credit and working capital. And as part of this, we're actively thinking about how we can broaden the range of products that we can sell through to small business. And the U.S. is, it's obviously a massive market. It's one of the most important small business markets all over the world. But there are other markets that are actually even larger. If you actually take small business credit demand in the Eurozone, for example, it's about 20% greater than the US. Going back to what I was talking about before, why would a small business owner come to us and not to a bank? It's simply because banks have largely pulled back from this. I'll be on a panel later today where we'll talk more about kind of the way the marketplace model actually fits as very complementary with banks. We've talked to over 100 different banks in the US about working with us in some capacity. And what we repeatedly hear is banks aren't viewing this as an existential threat. In fact, what they're viewing it as a great partnership opportunity, either as a way to serve borrowers by offering them a product they can't deliver themselves, or potentially through buying loans directly. In the UK, we actually have already partnered up with two of the largest banks in the country. Both Santander and RBS are partners of ours. In the US, we obviously are working with Crowdnetic on their efforts in this space, and then we also have relationships directly with a number of other banks as well. An important piece of this is underwriting. I talked about how data-driven underwriting, I think, is something that separates a lot of these platforms apart from more traditional manual players. I do think in the small business space, some aspect of manual underwriting is important, given the idiosyncratic nature of small business loans. I think this is particularly true in the term loan space. So what we're able to do is balance a very careful balance between making it almost automated up front, but then actually having some level of manual review at the end, which makes sure that our models don't miss anything. And as a result of that, what we're able to deliver is a superior borrower experience. And one of the things that I'm really proud of is the now over 10,000 small business owners all over the country and across the UK who we've lent out money to. One woman who took a loan from us about a year and a half ago is Dorka Beckett. Dorka, very successful, background similar to probably a lot of the folks in the room, worked in professional services, ended up going to Harvard Business School, and then inspired by having to care for her mother-in-law, started an elder care facility. And like me, I also operated a small business. She was shocked at how hard it was to get a loan for her business. So she became a Funding Circle borrower, and since she took that loan out about a year and a half ago, her elder care services business has expanded, opened 2 additional locations, revenue's up 150%, and she expects to double again this year. So it's really stories like this that are around kind of forming capital behind great entrepreneurs. That's what keeps me really excited about specifically playing in the small business space and using a marketplace model to do so. But I think a lot of analogous stories exist in the consumer side as well. So with that, again, really appreciate the opportunity to spend a couple minutes with you, and give it back to Luan. Thank you.